Welcome to this episode of Sunny Silver Linings. Sunny's guest is Stephen King, President and CEO of GrowthForce. From startups to working with Fortune 500 executives, Stephen brings his unique combination of vision, foresight, and experience to help small businesses run better, grow faster, and make more money. Regarded as one of the accounting industry's top thought leaders, he's currently serving as President and CEO of GrowthForce, one of the nation's largest cloud-based accounting services. And now, your host, the founder and CEO of IT by Design, Mr. Sunny Kaila. Over to you, Sunny.
Thank you, Todd. Stephen, welcome to my podcast. Thanks you so much for joining us today.
My pleasure, Sunny. Good to be here.
All right. Stephen, thank you for joining us. You know, a lot of entrepreneurs make decisions based on muscle memory or gut feel when they really should be making those based on data. What are some of the strategies you recommend to make the hard decisions based on the data and not just a gut feel?
Well, first, now is the time to not let your emotions drive your decision-making, because it's really difficult with all the hard news in front of us 24/7. The first real data point is to understand, where are you? How bad is the situation you're facing? What scenario is your reality? And there's three scenarios that we see. Unfortunately, there's some who are in survival mode, especially in the retail and hospitality and entertainment business. Do you have enough cash to be able to survive becomes the most important driver of figuring out your decision-making. The second is restructure mode. We're seeing most of our clients are in a spot now where they're saying, I have difficult decisions to make, but we're going to make it. So what data do I need at my fingertips to figure out the changes that are necessary? And then surprising number of clients, over 20%, are in strengthen mode. They're looking at this pandemic and this recession that we're in and saying, okay, how do we strengthen? How do we come out of this stronger? Because the world has changed, and now we got an opportunity to pivot and come out of this as a better run organization. So the data you want to have at your fingertips first depends on which scenario you're in. If you're in survival mode, the first thing you want to look at is, what's your break-even point? And that's really critical because it tells you exactly where you need to focus your energy. Break even is a pretty straightforward calculation. It's your fixed costs, which are the costs that don't change when you add a new customer, divided by your profit margin percentage. And I say gross profit percent is the most important number on any financial statement. And what that does is when you take your fixed costs and you divide it by your gross profit percentage, and that gross profit percentage is your revenue minus the cost to earn that revenue, your cost of goods sold. In a service business, in an IT business, it's going to be all the direct the direct expenses that the customer directly paid for. It's the direct labor, the people who actually did the work, who are on the help desk, who are closing the tickets, who are setting up the servers, and the people that the customer is paying for. That's direct labor. The other cost of goods sold is your direct materials, the stuff you had to buy to earn the income. So it's the routers and the software and the wiring. Those are all above the line costs. And the line is cost of goods sold. The line is gross profit percentage. And your income minus those direct expenses shows you the most important number, because you need to have enough gross profit in order to cover those fixed expenses and generate a profit. So that's the first number that we look at, Todd.
All right. And Sunny, over your 15 years of business ownership, how have you shifted to making your decisions based on data versus kind of what you're feeling is the right thing to do that day?
Todd, as Stephen mentioned, that you got to know where you are before you start having that journey towards your destination or where you want to be. For example, when we go to a mall, and let's say we want to go to a store in that mall, when we get in, we look for that map where it says you are here. And from that point on, you can kind of navigate to the store that you're going to, right? So first thing first is, do you know where you are in terms of your cash flow, in terms of your break-even point, in terms of your overall budget versus actuals? And in the MSP world, when you look at overall managed services, majority of the monthly recurring revenue is booked in the beginning of the month. So now you have your just few things that you need to book throughout the month. That's your hardware, that's your software, products and projects. So normally what we do is, of course, we have the annual revenue plan. Of course, we have that quarterly, knowing where we need to be at the end of the quarter. But we do look at our leading indicators and lagging indicators on a weekly basis. And the most important data point that I look at is after the monthly recurring revenue is booked, what is that variable revenue or revenue that's going to come from hardware, software, projects, and products, because that's where you have to manage things really well in terms of sales pipeline. And that's the most important data point to me, how much revenue you will be bringing in on top of your recurring revenue, because majority of the MSPs, they will plan their expenses in a way that those expenses are covered from the recurring revenue. So if you can manage your variable revenue from hardware and projects well, you can predict your month to be a good month in terms of P&L. But then you also have to look at all the other things that leads to having a healthy organization from the finance perspective.
All right. And cash flow, obviously, business owners understand the importance of cash flow. So, Stephen, what are some of the best practices you're telling your clients to manage cash flow right now? And how do they find that break-even point to know, how that month's going?
Yeah, well, break-even's good if you're losing money. And most MSPs are not losing money, right? We serve a lot of MSPs, so they're already past that break-even point. But that's the first data point you need to know is, what is the break-even? Because that's the minimum amount we need to bring in. So now if you're consistently profitable and break-even's not as big of an issue, cash flow becomes the next in kind of Maslow's hierarchy of needs. And cash flow starts with pricing. Cash flow is all about, are you pricing your jobs right? Are you pricing your seats right in order to cover your overhead and generate a profit? Because cash flow comes from profits. And if you're not generating enough gross profit margin to cover your overhead and generate a profit, then you're going to have cash flow problems. So anytime I see somebody who struggles, it's because they're profitable, but they're marginally profitable. They're 4 or 5% profitable. They're not 12 to 15% profitable. So the first thing is looking at that gross profit percentage to make sure that it's covering every job, every customer, every seat is covering its share of the overhead and then generating your target profits. In fact, I recommend a book called Profit First. Start by figuring out how much profit do you want to work on. I think, Sunny, when we talked earlier in the year, that was one of the first things we did was look at what's the goal? Where do you want to be? Then how much fixed cost, how much overhead, how much below the line cost that you have that your gross profit needs to cover. And once you understand that, then you can figure out what your pricing needs to be. And a lot of MSPs say, well, we're kind of in a commodity business. There's a lot of competition. I feel the exact opposite. Each MSP brings something unique to the table. There's certain skills, especially if you've been in business for a long time and you have a really good human capital strategy and you keep your people together for a long time, you're not going to have a problem getting from level 1 to level 2 or level 3 or level 4 support because you've got the people who have the knowledge who've been there for a long time. So that pricing is the first and most important decision we help people go through. Then you need to have the second piece of data, which is a cash flow forecast. And we have a 13-week cash flow model that we've developed for our clients where you can download your aged accounts receivable report from QuickBooks, download your aged accounts payable report from QuickBooks, and then it'll automatically allow you to just go in and enter 1 through 13. What week do you expect to collect on each receivable? What week do you expect to pay on the bills that you've got? And it brings, so you don't have to manually go in and enter all the customers and all the amounts and all the bills. And then it summarizes that into one summary, sources and uses of funds. And it makes it easy in Excel to be able to add any other sources of funds like deposits you're going to get, or if you're going to get any outside investors, or any uses of funds like payroll and paying down credit card. That is the next most important data point, because you have to be able to see at least a quarter in advance whether or not you're going to have problems making payroll in 3 weeks. And then you have enough time to be able to solve them. So that's the first most important thing around cash flow, is getting pricing right and then having the data at your fingertips to see what it looks like.
Absolutely. Great points. And I'm not even a financial guy, but it seems to make sense to me. So, I'm going to throw it over to Sunny. Sunny, when you and Suzanne, our CFO, meet for your weekly one-on-ones, what are some of the data points you're, making sure she brings to the meeting?
So on a weekly basis is more your cash flow, cash flow position to where you're going to end up. Can you predict where you will be by the end of the month based on monthly recurring revenue that is already recognized and the revenue that is in the sales pipeline from the hardware, software, and projects perspective? So that's the most important thing that I look at. But as Stephen said, revenue is one thing, and then profit is more important. And more than profit is how you're managing your cash flow. As they say, revenue is vanity and profit is sanity. But cash flow is king. So we always need to make sure that with that profit first approach, that's a very simple approach. When you receive a check, and let's say you decide on 5% or 10%, whatever your net operating income targets are, you take that money, put it in a separate bank, and that takes care of the cash flow planning as well, because you're now saving that money. So just a very simple action item that one can do is, apply the profit first technique, because that's going to help you a lot. That will challenge you to identify the right problem. If there is any problem in terms of profit, in terms of budget versus actuals, it's going to help you identify the right problem so you can work on that problem first. What Stephen referred to earlier in terms of that hierarchy of needs, that if sales is an issue, profit is an issue, it's going to help you uncover that in a very efficient way.
Excellent. Thank you. And, as businesses grow, some entrepreneurs, maybe they're not running the day-to-day books, as they did when they first started, Stephen. So how do you tighten some of the controls as you start bringing in CFOs and accountants and such to help prevent fraud and such?
Well, that's a really great question. Especially now, desperate times create desperate people. And we're about to enter into a period where I believe the worst is still ahead of us, unfortunately, as the pandemic numbers rise and the challenges in the change in the government. And, we're now at a point where we have 137% of debt to gross national product, right? We should be 60 to 80%. And so we're going to find ourselves, I believe, in a period where a lot of people are going to have a world of hurt. And what that means is that, especially as we've moved to a remote workforce, it's really important to be able to put in place the basics around internal controls. We just had a situation where one of our clients' bookkeepers, we do outsourced bookkeeping, accounting, and controller service, and we complement the existing in-house staff. And so in this particular client, we were the controller, they are the bookkeeper, and the bookkeeper was paying the bills, and her husband lost his job, and the kids were home streaming Tiger Kings on the iPad, and they didn't have an unlimited data plan, and they got a $685 AT&T bill. And the bookkeeper submitted her own AT&T bill along with the company AT&T bill. In the old days, the business owner would have paid the bill because it's just AT&T, right? But by separating the duties between the 3 steps that need to be separated on every transaction, the person who creates the transaction needs to be different from the person who approves the transaction, needs to be different from the person who reconciles the account. So one person in the bill payment example has to enter the bills, but a different person has to approve it. And then a third person should reconcile the bank account. You should never, ever, ever have the person who's paying the bills also reconcile the bank account. That's how small businesses get ripped off. And the average theft, the Society of Fraud Examiners just issued a report to the nation on occupational fraud. They found that these small businesses get ripped off way larger amounts than big businesses, which is opposite of what you would suspect, because there's one trusted person who's paying the bills and approving the bills and reconciling the bank accounts. And so by separating them, we could see that there was a second AT&T bill. And in fact, we used scanned images and workflow to be able to see that it wasn't even the company's bill. And so this becomes really important. The person who is entering the payroll should never approve the payroll, and definitely do not let them do the payroll taxes, because they could add money to the payroll tax deposit and you'll never see it. They can go back and claim a refund on their personal tax return. And the net payroll check doesn't change. Their gross payroll check doesn't change. They just fudge their W-2, and you could lose tens of thousands of dollars without ever seeing it. So that's one of the reasons why we suggest that you have a separate person doing that bank rec and looking over the shoulders of your trusted people, so that you make sure that you're not falling prey to that thing that we've all heard, the horror stories.
Okay. And Sunny, what do you hear from your peers, in the different peer groups that you're an active member of? What are some of your MSP owner peers doing along those lines to prevent fraud?
Yeah, I think Stephen covered the bigger picture in terms of having the best practices in place. But I do hear those stories. Everyone's kind of experience is different. One thing that I remember from one of my peer group is one of our close peer group member, their staff accountant was using credit memos as a way to take money out of the company. And by the time they uncovered that, it was like, I think, close to $200,000 that they had to go back and review every single credit memo that she issued. But so when there's an issue, like the market that Stephen he was talking with the market where we're moving, so there will be more. There's more potential to have these type of issues. So we can be proactive as business owners. And number one thing that I will do is make sure that at least those best practices that Stephen just discussed, those are implemented effectively. And if there's one more thing, which is more of, having even a third party like GrowthForce, if you have your internal team, having someone come in on a quarterly basis, monthly basis, whatever frequency you want to choose to audit your books. A person who is entering the bill versus approving the bill, then paying or reconciliation, and then having another check, like in terms of quality controls or audit in place. It can be a simple audit, but having an audit process in place can further reduce chances of having any kind of fraud.
So, Stephen, you mentioned a little earlier here in the podcast about some unsettled times still ahead of us. What are you recommending your clients do to prepare for those unsettled times?
Well, like we worked with Sunny and IT by Design back in March, when the first thing we did was we have this company scorecard, which is a one-page document to show you the 5 most important drivers of every business. It shows you the trends of your top line revenue, your gross profit dollars, your gross profit percent, which again, I think is the most important number of every business. It's why the sharks always ask on Shark Tank, how much do you sell it for and how much does it cost fully landed? And then it shows you your net income, dollars and percent. And what that allows you to do is to figure out, do you have a top line problem? Meaning, do we need to grow our way to getting back to profitability, or now that if you're in profitability, to increase that profitability? And that's a mistake most business owners make. They think that's all they need to do is just continue to grow the top line. Or do you have an above the line problem? Do you have challenges with your pricing or your time leakage or the efficiency of your staff, and your gross profits are not large enough to cover your overhead and give you a 10 to 12% profit or whatever your target is? Or do you have a below the line problem? Do you have too much fixed overhead for the amount of your revenue and the amount of your gross profit? So if your revenue is growing, your gross profit is growing, but your net income is not, like Sunny says, your vanity is good, but your sanity is not, then this chart shows you where you need to focus your energy. In this case, below the line. Do you convert some of your fixed costs to variable costs? And then what we've got is that we got a people scorecard. Sunny and I are both clients of Insperity. And what we do is, we make money on people's time. And so it's really important to be able to have data to look at what's your revenue per employee. So you can see how well you manage the productivity of people. When somebody quits, what's the cost of that? Or when you have to onboard a new employee, how fast do you get them to full productivity? Then you need to compare that to the labor costs per employee. And right now, we're about to enter into a period of heavy inflation. So labor costs are going to start to rise again. And you got to make the best run companies keep their fingers on that to see if it's time to change pricing. And then finally, what's your profit per employee? How well do you manage the human capital and the financial management? And do they work together to help you drive performance, productivity, and profits?
Wow, great point, Stephen. Appreciate that. And Sunny, as we did the prep here, I understand you and Stephen met because of the scorecard. Were there any eye-opening moments as you filled that scorecard out?
Yes, Stephen has a great tool from the scorecard, or in general, just kind of having those reports and dashboards that matters. So that's how we started our relationship, and we are now partners. We started with the company scorecard, and then Stephen's team did a great job to help us optimize our chart of accounts. That helped us get better data out of our accounting package. And that helped us to better prepare for those three scenarios that we kind of, in terms of using a template, we are using GrowthForce, where best case scenario, mid case scenario, and then best, mid, and low. That's what we did in March. We had the company scorecard, and we had everything else. We reviewed, reassessed everything, and then we were like, okay, let's prepare these three scenarios for 2020. We prepared for the worst case scenario, and so far we have performed at the best case. And that's what we are doing right now. So we are done with our 2021 budget. We use, as you know, Todd, EOS. So we always have the 3-year business planning. So we are done with the 2021. We have that bigger picture for 2022 so that we are on track with our VTO up to December 2022. And having right chart of accounts, easy to understand those reports, and the company scorecard helped us strategize for 2021 and 2022. And we even applied lessons learned from March to now. Having those three scenarios, as they say, you prepare for the worst and hope for the best. Preparation in the beginning is key, and that we did a lot of preparation in March, and reflection at the end. When the leadership team at IT by Design, we met for our 2021 and 2022 strategy, we reflected on, what we prepared the company for, and what are the lessons learned. And we are applying those lessons in our 2021 strategy and everything. But the key thing here is not to let your guards down. This is not the time for you, no matter what your cash position is today. You have to make sure that it's very unpredictable 2021 coming our way. And no one is, 100% sure where things are going to go, because we still have the spike, virus, the spike going up. In number of cases are going up, and how it's going to impact in terms of shutdown. I know there's a summit happening in the East Coast with all the governors from the Northeast. And they are kind of coming together and discussing how they're going to handle things in the winter and how it's going to impact us. So we don't have that information yet. So my suggestion to everyone, every business owner out there is don't let your guards down, prepare for the worst and hope for the best, and do take that time to understand your data in terms of what your cash position is, your cash generation to your break-even point, and also making sure that a lot of decisions that businesses made in terms of people, because when they were going through some tough time in April, and people didn't know who are their A players, who are their B players, who are their C players, always revisiting those sheets that you have prepared to make sure that you have, who are the high performers, who are the low performers, and especially in the remote workplace world, I see that I meet a lot of managers, a lot of leaders, almost every single week, where they're not taking the time to sit down with their employees. And when they have to make those tough decisions and they don't have any feedback that they have given. So this is the time, especially in the remote workplace, it's taking that time from the people component perspective as well, and making sure that you stay on top of your financials and your people, culture. To keep that culture strong through tough times, it is important that leaders stay on top of those three things. Culture, which is people, having people first always is important for businesses, and financials, right? Finance is your lifeline. So having that in place, you as a leader are becoming. You as a leader, you are a responsible leader, because these families, these people, they depend on your decisions. And if your decisions are not data-based, especially accurate data-based, then you are not doing your job as a leader.
Sunny, you just that's my love language, right? You talked about how you need both a human capital strategy, a people strategy, and a financial management strategy. And I've been a CPA for 36 years. This is my 6th recession, and I'm a data junkie. So I study what's the difference between the companies that are wildly successful and the ones that struggle. And they have one or the other. They either have great numbers, they can see profitability by customer, by job, by city, by state, but they have turnover. They don't have the right people in the right seats on the bus. And then you have the people who have the companies have great culture. Nobody quits. They're there for a long time, but they don't have clear written goals. They don't know what their path is. And you need both to bring together that human capital strategy and the financial management strategy. And that's what, GrowthForce is really passionate about it's people that drive profits. And you summarized that really well.
Yeah, thank you, Stephen. And that's what, when we met in March, and your guide to success for CEOs and companies in general, the scorecards that we were talking about, that's great stuff, man. And thank you so much for sharing that with us. And you have made a big difference in our business this year.
Great. Warms my heart. Thank you. That's why we're GrowthForce, right? To help businesses grow their bottom line.
Stephen, thank you so much for joining me today. I truly appreciate your time. Lot of valuable insights there. And thank you so much for sharing that with our community.
Thank you, Sunny, for having me. It's always good to see you.
All right. Thank you, Sunny. Thank you, Stephen. And Stephen, it sounds like the scorecard was the beginning of a great relationship between you and Sunny. And, some of our viewers and listeners say, you know what, I'd like to kind of get that process started. What's the best way to get a hold of you?
Well, we've got a guide to how people drive profits, and it walks you step by step through those 5 most important drivers of every business. And how do you read the scorecards? And then once you read it, what do you do about it, both on the people side and the financial management side? And we're happy to give that away. You can reach me at my email is Stephen, STEPHEN, at growthforce.com. That's GROWTH force.com. Our website is www.growthforce.com. I'm also on LinkedIn at Stephen with a PH King, CPA. So please connect, and I'm happy to share our guide to how people drive profits.
Great. Thank you. Sunny, thank you. Stephen, thank you. And to you, the listener, thank you for taking the time to watch this episode. We do appreciate it. And With all the nuggets that were dropped today, I'm fairly certain you took one or two away. And if you did, please honor us with a like, a share, a subscribe, and we'll see you in the next episode.